Ladies and gentlemen, boys and girls, students of all ages, welcome to Debit Credit Nation. So, today we are going to talk about final accounts. So, final accounts is one such topic which you learn in class 11. But as you grow up through your career, in your boards, in your graduation, like BCom, in your masters, MCom, MBA, or in your professional courses, for example, if you pursue CA, costing, or company secretaryship, everywhere you'll be asked questions on final accounts. So today I'm going to talk about final accounts, and this is a final account of class 11. So this is the stepping stone. So it's a final accounts of a sole proprietorship business. So what is the final account? So throughout the year, whatever transaction have taken place, at the end of the year, the sole proprietor or the company or the partnership firm, they have to prepare final accounts. It's not mandatory for everyone. Like for sole proprietorship business, it is not mandatory, but again it's mandatory for companies, or sometimes it's mandatory for the partnership firms. The final account has three major components. The first one is called trading account, then we have the profit and loss account, and finally we draft a balance sheet. So final accounts becomes necessary. Every company who are registered in a stock exchange, that is a public company, they have to submit the final accounts, the audited final accounts, and based on that audited final accounts, investors decide whether they are going to purchase or sell the share of that companies. So without any further ado, let's open up a final account question. So this is the question. Let me zoom it. So this is the question. This is a question of West Bengal HS 2009. So I'm going to solve this question. So for solving this question, let me first tell you what are the tricks that you can apply to make sure that your balance sheet tallies. First, you see how many adjustments you have. So you just need to identify the items from trial balance. So this is the trial balance, and you have some additional information. So here 7 additional informations are available. So first you need to understand that which additional information is linked with which item in the trial balance. Sorry, my bad, let me erase this. So as I was saying, that I need to identify that which additional information is tied to which item in the trial balance. So stock is not tied to anything. Next I have goods distributed as free sample. So as we do each item, I'll discuss this in detail. So this goods distributed in as free sample is related to, it can be either linked with the purchase account or with the opening stock. So here I'm going to use it with the purchase. So I need to find out purchase here, purchase, so here purchase. So for the items on which you see a linking adjustment, you just need to put a mark next to it. Okay, so purchase has an adjustment. Next, if I scroll down, sundry debtors and sundry creditors. So next, for sundry debtors I have one adjustment, sundry creditors I have one adjustment. So next point, sundry debtors has one more adjustment. So go to sundry debtor, sorry, just make sure you see 2 marks. Okay, sundry debtors, I have added the second mark. Next, going forward, I see wages. So look for wages. So wages, just make a mark. Next is the general expenses. Look for general expenses. So here I see miscellaneous expenses. I assume that miscellaneous expenses and general expenses are separate, so I'm not putting any mark against any particular item in trial balance. Next I have plant and machinery. So look for the first item is the plant and machinery, just put a mark. Then I have furniture and fittings. So again, against furniture and fittings you just put another mark. And finally is the provision for doubtful debt on sundry debtors. So for sundry debtors I see one more item. So sundry debtors. Okay, so just make sure that you read all the adjustment and identify which are the relevant items where this adjustment needs to be made in the trial balance. That's it. Now go for it. So here our motto is not to complete the trading account first, then go for profit and loss account, then go for balance sheet. You need to post whatever item you find, you need to post. So for balance sheet, first let me put out the subdivisions. So in the asset side we have fixed asset, then we have investments, then we have current assets, and finally we have something called miscellaneous expenditures. Okay, just making them in bold because these are all headings. And similarly on the liability side we have current liabilities. All right, you're set to go, and obviously you need to write the pro forma. So I need to find out the proprietor's name. So the proprietor is Mr. Mukherjee. So in the books of, you just enter Mr. Mukherjee. Now you will identify that there is one fundamental difference. In trading account we call it for the year end date, in profit and loss account we call it for the year end date, but for the balance sheet we call it as on or as at. What is the why we do it in such different way? Because trading account and profit and loss account, these contains expenses and incomes. So on the debit side we enter the expenses, and on the credit side we enter the expenses. So expenses and income is incurred throughout the year. Okay, so suppose I write here salaries. So there is one salary for January, one for February, one for March. So every salaries are added. That's why it is created throughout the year. But this balance sheet is created as on the last date. That means I enter the closing balance. So if I have a say fixed assets, if I have a building, I need to enter the closing balance of the building. So I don't enter the, so in building you don't have any periodic expenses. Like here I have rent, January's rent, February's rent, March's rent. That's why I enter periodic rent. Similarly, I get commission. On the credit side I receive commission. So January's commission, February's commission. That's why this is created throughout the year. But here we wait, we don't start it throughout the year. At the end of the year we create the balance sheet. That's why the balance sheet has as on, but the profit and loss and trading account is created throughout the year. Okay, so let's find the first item. We have plant and machinery, so it's a fixed asset. So go down and under fixed asset you write plant and machinery. Okay, now the trick is, why did we add these marks? So for each item which has a mark, you need to enter this amount in the inner column. Okay, so here in plant and machinery, so I will enter the amount of 50,000 in the inner column. All right, next item is furniture and fittings. So again, so the items which are having a mark, you need to put the amount in inner column and you need to leave one line. Okay, if it has more than one mark, you have to leave more lines. So for example, plant and machinery has one mark. That means I will leave one line and I will start the next item after keeping one line of gap. But for example, in sundry debtors there are 3 items. So for sundry debtors I have to put a lot of, leave a lot of spaces. So furniture and fittings, I will not start furniture and fittings from here. I will leave one line and I'll start from here, furniture and fittings. Amount is 10,000. Again it has a mark, so I'll put it in the inner column. Next I have cash and bank and hand. So straight away go down. So here I will add cash and cash in bank and hand. Since it doesn't have a line item, it doesn't have a red mark, so that's why this 14,500 I am putting in the outer column, 14,500. All right, what's the next one? Next one is stock. This is the opening stock. So again opening stock doesn't have a mark, so I'll put it. So go back to go back to trading account. The first item, to opening stock, outer column, because I don't have any adjustment, 35,000. All right, now one more thing I would like to take your draw your attention to, that trading account and profit and loss account has a debit and credit side, but the balance sheet doesn't. That's because trading account and profit and loss account, these are all ledgers, these are nothing but ledgers, but balance sheet is a statement. It has a liability, it has a asset. So that's why whenever we enter anything, we don't call it to or buy in the balance sheet, but in the trading or profit and loss account we call it to opening stock, buy, sales, like that. Okay, so it's a part of it. The accounting, the journal entry is trading account debit to opening stock account. Okay, so the debit side. Okay, one more thing I would like to add here. So there can be as I told you that the debit side is for recording expenses and credit side is for recording incomes, but now we need to distinguish which items will appear in the trading account versus which items will appear in the profit and loss account. So only direct expenses and direct incomes will appear in the trading account. What is direct expense or direct income? The income which is absolutely necessary to conduct manufacturing or trading is called trading account, will appear in the trading account. Or the items which are not necessary for the production or manufacturing, but it is a associated item, for example office rent. Okay, even if I don't pay my office rent, my production will still go on, but if I don't pay my factory rent, my production will not go on, because there's a factory, I have taken rent and I am producing, I am manufacturing. If I stop paying the rent, my landlord will throw us away. That means there will be no production. So whenever the production is hampered, all those expenses which are relevant to production are called direct expenses or direct income, but all those expenses which are relevant for administrative stuff or selling stuff, the expenses which are necessary to sell the product, will be posted in the profit and loss account. So to opening stock is done. Next item is sundry debtors. As we see, a lot of adjustments are available with sundry debtors. I have to keep a lot of spaces after sundry debtors, so I'll go down. So it's an asset, so I'll call it sundry debtors. Why it's an asset? Because you are about to collect money from these people, that's why it's an asset. So it has adjustment. I will put it 30,000 in the inner column. I'm just adding couple of lines because the sundry debtors will consume more spaces, just inserting couple of lines. Alright, next item I have bills receivable, so I'll add it here. Bills receivable, again it's an asset. It is similar to sundry debtors, that means you are about to collect money on the maturity from these customers. So 15,000 is my bills receivable, no adjustment. Next item is capital. So capital is the first item in the liabilities, capital. Why capital is a liability? Because in accounting, the business has a separate legal entity. So the business lookout, the business's responsibility is to get the capital back to the owner. So Mr. Mukherjee has started this business with a capital of how much? 80,000. So that means the business's responsibility is that at the end of the year, the business should generate, give back 80,000, and along with that some profit should be given. For example, the business is started with 80,000, but the business's responsibility is that they will generate 1 lakh. That means the entire 80,000 will be given back to the proprietor, plus say 20,000 profit will be also be given back to the proprietor. So that's why it's a liability for the business to return back the capital to its owner. That's why this capital will appear on the liability side. No adjustment. Okay, why I have put it in the inner column? Because I have to add net profit. Okay, that's why capital, after capital we add net profit less drawings, then we put it in the outer column. Okay, although it doesn't have an adjustment, but still I am putting it in the inner column. The reason why? Because I have some internal adjustment, not from this additional information. Okay, next item I have sundry creditors. So under current liabilities I will put sundry creditors. So these are the liabilities. So inner column is 20,000, because I have to pay them money. That means I have purchased goods from them but I haven't paid. So sundry creditors are just the reverse, the mirror image of the sundry debtors. Alright, next item. So inner column, because it has an adjustment. Carriage on purchase is nothing but carriage inward. Okay, so in the trading I will add 2 carriage inward. Outer column, no adjustment, so I'll put it 1500. Next item I have wages. So again it's a production related expenses. Okay, so carriage inward, if I don't bring the goods into my factory, so whenever I'm doing any manufacturing, I have to bring the raw materials into my factory. So during bringing the raw materials, the carriage, the freight, okay, the expenses I have to incur, those are carriage inward. Similarly, there can be wages. Okay, the person who conducts all the labors who converts the raw materials into finished goods, we have to pay them wages. Without them the production will be hampered. That's why wages will appear, it will be a direct expense and it will appear in the trading account. So wages has an adjustment, so I'll put it in the inner column, 12,000. Next item I have salaries. Salaries is an administrative expenses. Without salaries the production will continue, because the person who actually perform the work, who does the manufacturing, they are paid wages. But later in the office, the person who works in the AC, who sits in the AC cabin, to them we have to pay salaries. Even if I don't pay them salaries, my production will continue, but my administrative stuff will be hampered. That's why salary is an indirect expense, it will appear in the profit and loss account. No adjustment with salary, I'll put it outside 10,000. Next I have miscellaneous expenses. Remember, miscellaneous expenses and miscellaneous expenditures are different. Okay, miscellaneous expenditures are those expenditures which will bring me benefit for more than one financial years, but miscellaneous expenses are simply indirect expenses. So I'll put it here, to miscellaneous expenses, outer column, 2000. Next I have miscellaneous incomes. So here it's an income by miscellaneous income. No adjustment, I'm putting outer column, it's a credit item, 2000. Why have I kept the first line blank? Because I have to carry forward the gross profit. From trading account I will find the gross profit, then and carry forward it into profit and loss account. From the profit and loss account I will get the net profit, then I'll carry the net profit into balance sheet. Okay, we'll look into this in a moment. Next we have purchases. So next item is to purchases. Okay, it has adjustment, so I'm putting it in the inner column, 75,000. Next I have sales. So by sales, it's a revenue, it's the main revenue. So it's it's direct income. Okay, so if I don't sell, then why am I doing the business? I am purchasing something. If I purchase something, then I consume it, it's not a business. I have to, after purchasing, why am I doing this business? Because I have to resell. I am not consuming this stuff, I am purchasing, then I am selling. Okay, see, this Mr. Mukherjee has purchased goods worth 75,000, but he has sold goods worth 1,50,000. Okay, so there is a profit involved straight away. So sales is an direct income, it will appear in the trading account. Last item I have commission. So commission can be expense or income. See, in the trial balance it appears in the credit side, that means it's a income. So it's sales related, so it will appear here by commission. No adjustment, outer column, 3000. So now I have completed my posting. Posting means whatever items are appearing in the trial balance, I have posted in the I have distributed them between trading account, profit and loss account and balance sheet. Now if I try to tally whether my balance sheet will match or not, yes, it will match. Do you want to see? Let's see. So the credit side summation, because anyways I have to redo, but still I just want to see that whether it is getting tallied. Okay, so I'm just putting some formula. So you don't have to remember this formula, because since I am doing it in the Excel, it makes things easier using a formula. To net profit. So ideally we deduct the items which appears in the outer column, but there are a couple of items which are still in inner column, so I don't know what are the amount going to be. That's why I am deducting all the inner and outer column, okay, for the time being, to find out the net profit, to make sure that I have correctly posted all the items from the trial balance. Before touching the additional information, before touching the adjustments, if I post all these items correctly, then my balance sheet will definitely tally. So I am trying to find out that. You don't have to do that, but just as a part of demonstration I am showing you. So here I am putting the formula of 1,50,000 minus sum of all inner and outer column. Okay, so my net profit is coming as 26,500. so I can call it 2 I can call it to profit and loss account within bracket, sorry, it is gross profit, and here I'll call it by trading account within bracket gross profit. So I'll bring in the same figure here. Okay, now I'm putting another sum here. So my credit side summation is 31,500. Now here I'll find the net profit, to net profit. Now since I don't have anything in inner column, I will just straight away deduct these two, the outer column items. So I'll put the formula equal to 31,500 minus sum of all these items. So my current net profit is 19,500. So I'll add it, add net profit 19,500. Okay, and then I will add these two. So here I'm putting a formula of 80,000 plus 19,500, and I'm just putting a border here. Okay, now if I try to find out whether my balance sheet tallies or not, so on the asset side I have total of, you see summation appears here, 1,19,500 summation. Okay, I'm not doing summation, just Excel will show me the summation. So my asset summation is 1,19,500 and my liability summation is this one and this one. See, 1,19,500. It means that since I have posted all my trial balance items, that means I have correctly posted all items. Okay, because my balance sheet is telling without touching the additional information, the amounts are, my balance sheet is showing 1,19,500 in both the sides. So you don't have to do it, just I am showing you as a to make sure that how double entry system works. Now we'll talk about the additional information. So for each now since it is already balanced, my balance sheet is already balanced. Balanced means the summation of liability and the asset are same. So now with the balanced balance sheet, if I add any item, I have to add it twice. I have to make adjustment twice, else the balance will be in trouble. Okay, so if I add, so currently my balance sheet is 19,500, 19,500. Now if I add closing stock in one side, then the asset side will be higher. So that means for each additional information I have to make at least two entries. Okay, so the first entry is the closing stock. So the closing stock will appear in by closing stock, it will appear in the trading account. So closing stock is how much? 50,000. Same, and in the current assets I will add closing stock 50,000. Sorry, there is no adjustment, I'll add it in the outer column 50,000. Now let's see, after adding the first adjustment, does my balance sheet tally? So my balance sheet's asset side summation is 1,69,500 versus its liability summation is this and this. Okay, 1,69,500. So I have correctly posted the two parts of the additional information. That is the magic of double entry system. Okay, so moving ahead to the next item. Next I have goods. Okay, why the closing stock appears under the current assets? Because I have manufactured, say I am a mobile phone manufacturer. I have manufactured 10 mobiles. Out of them I am able to sell 7 mobiles. So 3 mobiles are still unsold. That means those are closing stock. Those are my asset, because this year I was not able to sell those 3 mobiles, but next year I will definitely sell those 3 mobiles. Okay, so it's an asset, it's a current asset. Why current assets? Difference between current assets and fixed asset is that from current assets I will get benefit for one financial year, but from fixed asset I will get benefit for more than one financial year. All right, so closing stock although I couldn't sell it today this year, next year I will definitely sell it. So like within one financial year my closing stock will disappear and it will become zero. So that's why it will appear under the current assets. Next item, I have goods distributed as free sample. Now, so whenever I am going to distribute goods, see, I have some opening stock and I have purchased a few new items. Now whenever I am distributing goods, that distribution can happen from opening stock or from purchase, right? So here I am assuming that I am distributing goods from my purchases. Both of them are in my stock. So on 1st January 2018, when I started my started the new year, I had this opening stock. Then throughout the year I purchased this 75,000 item worth of goods. So I total currently have 1,10,000 worth of good. Now when I distribute sample, I can distribute from my opening stock or I can distribute from my purchase. If you assume that you are distributing from your purchase, you can deduct from purchase. Else if you want to assume that you are distributing from opening stock, yes, you can deduct from your opening stock. So I am assuming that I am distributing from my purchase. So we call it purchase less free samples. How much? 2000. So now so here 75,000 minus 2000, it is coming as 73,000. And the other impact is, so it's an expense to me, although I'm distributing as a free sample, it's like a loss or expense to me. So it's the indirect expenses. So I'll put it here, 2 free samples. How much? 2000. Yes. Now my balance sheet may not tally. Why? Because now I have one item in the inner column, then some item in the outer column. So what I need to do, I need to put the right formula. So I am no longer doing the summation of both inner and outer column. I have to do the summation of the outer column only, because ultimately everything will appear in the outer column, right? Like this wages, I will do some adjustment and after that I will put it in the outer column. So I'll change my formula. So that means I'll put the formula with the summation of the outer column only. Okay, now you may see that my balance sheet will not tally because I have some inner item, some item in the inner column, but my formula I put it on based on the outer column. That's why it is not telling. But if you properly do properly calculate, then if you consider it in the outer column, then it will tally. Okay, every adjustment if you do correctly and twice, it will tally. The balanced balance sheet will not be disturbed. Okay, all right. Next item I have, sundry debtors includes a sum of 3000 due from Mr. X and sundry creditor includes a sum of rupees 2000 due from Mr. X. Let's understand this adjustment. That means my total sundry debtor is, so from customers I need to collect 30,000 and there are some people who are about to collect 20,000 from me. So these are all my customers and these are all my suppliers, okay, or creditors. Now there is Mr. X who appears both as a debtor and both as a creditor. Okay, so it says that I am supposed to collect 3000 from X and X is supposed to collect 2000 from me. Okay, so here if you see that so I will pay I will collect 3000 from X, again I will give 2000 to X. It doesn't make any difference, right? So that means in this case there is a contra entry. Like in cash book you do cash account debit to bank account or bank account debit to cash account. Similarly there is a contra. How much is common? That means I have to pay 3000 and I have to collect 3000 and this X needs to collect 2000. So if I see how much is common, 2000 is common. So out of these two items, whichever is the least amount is common. That means if I remove the 2000, then net to net I need to collect 1000 from X, right? Because I will collect 3000 from X, then I will pay 2000 to X without doing both the transaction. If I collect 1000 from X, then it is fine. So that means what did I eliminate? I eliminate the lower amount, right? So if you see such kind of adjustment, you need to find out the lower amount and deduct the lower amount from both debtors and creditors. So come here, less contra, or you can call it less set off. Okay, 2000 from here, same from creditors, less contra. Okay, since creditor doesn't have any entry, I'm going to close creditor here, and I'll put the balance equal to 2000 minus, sorry, 20,000 minus 2000 is 18,000. Okay, but customer still has, see, customer has how many? 3 adjustments. One is done only. Okay, so I will get this done. So I'll not put the balance in the outer column. I will wait. So this adjustment is done. Next is sundry debtors also include a sum of rupees 1000 due from another customer who has become insolvent and nothing could be realized from him. That means out of the 30,000 sundry debtors, there is one debtor who is insolvent and he cannot pay. So it is nothing but bad debt. Okay, so less bad debt. Okay, so how much I cannot collect? I cannot collect 1000, so I will have 1000 here, and since it has another impact, so I will go to my trading account. It is a loss or expense. Okay, in nominal account, expenses and losses to be debited, so I am going to debit it to bad debt. Outer column, how much is a bad debt? 1000. You have to make sure that you enter the same amount in both places. Okay, so I did that, bad debt. Next I have outstanding liabilities. So there are a couple of outstanding liabilities. So outstanding, as you see, it's a liability, that means it will appear under the current liabilities. So there are 2 outstanding liabilities. One is called wages. So outstanding wages, outer column, straight away 2000. And outstanding general expenses, outstanding general expenses, outer column 1500. All right, same, these are all. So what is outstanding? That means you have some labor who has worked for you, but the month has passed by, but yet you haven't paid them their wages or their salaries. Okay, so these are the expenses. So after there is a due date, say we pay the wages on 30th or 31st of every month. Suppose it's already, say, 8th of the month, but you haven't paid the wages of the previous month, so it becomes outstanding. Okay, so it will be added with the wages. So find out wages, so it's the wages, so add outstanding wages. How much? 2000. So now balance sheet equal to 2000 minus, sorry, 12,000 minus 2000 is 10,000, and for the outstanding general expenses, since there is no general expenses, you cannot add it, so you call it separately, 2 general or 2 outstanding general expenses, 1500 here, 2000 here, and again 1500 here, right? Next, moving on, I have 2 more adjustment. Provide depreciation on plant and machinery 10% per annum. So find out plant and machinery. So plant and machinery less depreciation 10%. Okay, so equal to 50,000 multiplied by 10% depreciation, and here equal to 50,000 minus 5,000. So outer column, it becomes the closing balance of the plant and machinery becomes 45,000. Again, there are some depreciation on furniture as well, so I'm just copying and pasting here. How much is the depreciation on furniture? 20%. So I'll replace 10 with 20. So here equal to 10,000 multiplied by 20%, and I'll close it. Outer column equal to 10,000 minus 2,000 equal to 8,000. Now the same effect I have to, these are all expenses, so indirect expenses. So here in the profit and loss account, to depreciation, under that I can have hyphen plant and machinery. How much is that? Plant and machinery is 5,000. and hyphen furniture and fixture. How much? 2000. Now add these two, close it from the inner column. So equal to this plus this 7000. Now last adjustment I have is for the create provision for doubtful debt at the 10% on Sunday debtors. So now find out the closing balance of debtors. So if I find out the closing balance of debtors, so equal to 30,000 was my initial balance, less there is a contra of 2000, less there is a bad debt of 1000. So this is my closing balance. Now less provision for doubtful debt. Okay, what is that? So I am about to collect 27,000 from the debtor, but I think that there can be a bad debt. I am afraid that there can be a bad debt. It is not a real bad debt, but I'm scared that the customer may not pay 5% of their dues. Okay, so I provide a bad debt of 1350, which is the 5% of their total outstanding, their total closing balance. So my final closing balance of debtor is 27,000 minus 1350, which is 25,650. Now this provision for doubtful debt, it is a expense, so I'll put it on the indirect expense side to provision for doubtful debt, and the amount is 1350. Okay, so I'll put 1350. So that was my last entry. Now my amount, my balance sheet should tally. So this is my debit side, and this is my credit side summation, 80,500. Sorry, I made a mistake. This outstanding wages I need to add, I somehow deducted it. So equal to 12,000 plus 2,000. Okay, so this is my final gross profit. Now this 76,500 will be carried over here, and from here, since I have a formula, it will take the it will find out the net profit. So my net profit is 56,650. The same net profit will appear here and it will be added. So if I do a summation of my liability side, so my summation is sum of all these. This is the total of my liability side. Let's see whether my asset side tally or not. So same formula I'll add here, equal to sum of all these. Yes, both of them are now telling. So this is how you do final accounts. Okay, so there can be different adjustment, but make sure you do the posting correctly, and if you do both the impact, both side of the adjustment, your balance sheet will tally, and thanks to double entry system there will be no error. So I wind up this video right here. If you have any question, you can put it in the comment section, and if you want me to create video on any other topic in boards or BCom or MCom, you can put it in the comment section and I will definitely do that. Thank you so much. Keep on loving Debit Credit Nation. Keep on supporting. Keep on subscribing to Debit Credit Nation. Thank you so much. Bye bye.